Corporate finance practice problem using OneNote. Earnings per share, dividends per share, and dividend yield calculations. Get ready. It's time to take our chance with corporate finance. Here we are in OneNote. If you have access to OneNote, would like to follow along, you're not required to, but if would like to, we're in the icon on the left-hand side, the practice problems, then down in the 1821 earnings per share, dividends per share, and dividend yield tab. Also note when using OneNote, look at the immersive reader tool. Our presentations will be down in the text area as well. Same name, same number, but with transcripts that can be translated into multiple different languages and either listened to or read in them. Closing the icon, we have our information up top, calculations on down below. We're going to be looking at these ratios here. And remember, when we're looking at these calculations, the earnings per share, the dividends per share, the dividend yield, we're thinking of kind of like the equity section, breaking out the equity section. We can think about the equity section in total, meaning, in essence, the owner's share of the company, the owner's claims to the assets of the company as opposed to the debtors. And because it's a corporation broken out into chunks, those chunks, the stocks, we can think about that in aggregate and in a per unit type of basis. We want to keep those kind of things in mind. Also keep in mind that as we look at these calculations, we want to see the interplay between them, not necessarily looking at and memorizing a bunch of separate formulas that we don't see how they interplay together, but rather getting better at the interplay between them so that we can understand them better in practice. And when you're looking at test questions, they will often limit the information, of course, so that you'll have to kind of back into it in sometimes and not have, the calculation in the format that you're used to seeing the data, because it won't be in there in that format. So we have the market price at 85, the price earnings ratio at the 20, and the payout ratio at the 0.55. Remember that the price is going to be something not given to you within the corporation. That's determined by the market. If it's a publicly traded company, then it'll be readily available to you. The price earnings ratio is going to be our ratio calculation for the price compared to the earnings, of course. And then we got the payout ratio. That represents the earnings. You can think about this on a per share basis or in aggregate. That's the beauty of having those standardized units of ownership. And that's going to be the earnings, basically the bottom line of the net income, and the percent that has been distributed over to the dividends. You can think about that in aggregate or on the per share basis, earnings per share, and then the amount that would be distributed in the form of dividends. Okay, so first let's think about the earnings per share calculation. So once again, if you think about the earnings per share, you could think about, maybe the first thing that would come to mind is the total earnings basically on the income statement divided by the number of shares out there. That's probably one of the first calculations that come to mind. We don't have the aggregate numbers here. So you might then say, okay, well, what do we have? I know I have this price earnings ratio. Let's think about the calculation related to it and see if we can possibly back into the earnings per share. So it would look something like this. We've got the market price and then the earnings per share. Market price divided by the earnings per share is going to give us the price earnings ratio. The earnings per share is the unknown. You could also calculate this or write this out basically algebraically, solving for the unknown then being X, or you can solve for X, which would be the earnings per share, which would be this yellow number. And I oftentimes will still list it out kind of vertically like this, even in a test situation or something like that, where I want to just jot it down rather than horizontally if it's a short calculation, so I can kind of just back in visually to the unknown number, just check my work in a horizontal fashion pretty easily that way. But whatever you're most comfortable with, given the circumstances that you will be working in. So in other words, if the 85 divided by something, if we imagine the yellow number being X, would be 20, then we should be able to take the 85 divided by 20 to back into the earnings per share, which in this case is 4.25. If we wanted to double check our work, then we could take the 85 times the 4.25. That would give us, 85 divided by the 4.25. That would give us our 20, once again, checking our number. Now, if you were to see this in a book problem or something like that, to check your work, you'd get the earnings per share calculated this way, which would be the market price and then divided by the price earnings ratio, making you think that like you have to memorize the earnings per share calculation basically in this format, which you might want to do, but if you do, you want to make sure that you kind of see the relationship between the price earnings ratio and the earnings per share, be able to manipulate those in your mind and or write them down, if not, and write them down and manipulate them on paper using, a quick algebra calculation. So here, of course, same thing, 85 divided by the 20 is going to give us the earnings per share of the 4.25. Then we can take a look at the dividends per share. Now, the dividends per share, you might think, well, to get that number, normally I would look at the dividends in aggregate, possibly that were given out, and then divide it by the number of shares. We don't have that though up top. What we do have is the payout ratio. So if I think about the payout ratio, I know that's kind of the relationship between the earnings and what got paid out. I don't have the aggregate numbers here. I don't have the net income bottom line of the income statement. I have the per unit numbers, but I should be able to work with that. So we can take then the earnings per share, which is going to be calculated out. So we can compare then the dividends compared to the earnings per share to get to our payout ratio. Let's do it this way. Dividends compared to the earnings per share. And the dividends, of course, is going to be the unknown that we don't know. So we can use that formula once again, backing into the unknown. This time the unknown being the dividends per share, X. And then we're going to say X divided by the earnings per share is going to give us our payout ratio. And if we were to back into that, we could say, okay, this divided by this gives us the 0.55. You could, once again, write it out horizontally. I like to basically do it in this vertical format a lot of times with these short calculations. I think it's easier to see sometimes and just double check it. So if that's the case, I could say 4.25 times the 0.55 should get us back up to the 2.34 about, rounded to 2 digits, and then we can double check it. 2.34 divided by the 4.25 gives us back to our 0.55 payout ratio. Now, if you saw this in a book problem or an answer key, they'd give the dividends per share as if you'd kind of have to learn to memorize the formula in this format, which again, you might want to do, but you also might just want to understand the relationship between these two. Meaning, as you do memorize these new formulas, you don't memorize them in a isolation booth in your mind, completely separate with the walls up from the other formulas. You see the relationship between these two. You'd like to be able to turn them over in your mind, or if not, turn them over on paper. Don't worry if you don't have the complete grasp of every formula. You want to know the key relationships, the key formulas. Okay, so then of course, same thing, 4.25, and then times the 0.55, and that's going to give us the 2.3375 or the 2.34 about for the dividends. Remember, you can think about that, that ratio kind of on an aggregate level or like a per unit level here. Aggregate would be the total earnings of the company, ratio that got paid out. Once again, that's the beauty of breaking out, the earnings by these standardized units. It allows us to work with the numbers much more easily. Then if we have the dividend yield, we've got the dividends per share at the 2.35. That's our dividends per share now, comparing that to the market price, which we said was the 85. That's the thing that's not on the corporate information. It's going to be driven by the market, of course. So then we get our percent. Let's put that in the trusty calculator. The 2.34 about divided by the 85 gives us about the 2.75. Moving the decimal place 2 places over, that giving us our dividend yield.